Did you know the world average inflation rate right now is at 2.99%? This means depending on which currency you own, you're losing around $3 for every $100 you save. By not investing, you're basically throwing your money into the ocean. Hey everyone, welcome to my channel. I'm Roy, and today I'll be talking about how to safely invest into Hong Kong and US markets as a complete beginner without any knowledge or experience. Obviously, I won't be telling you to throw all your money into high risk, high reward stocks, as these are extremely risky. But rather, I'll be talking about a relatively safe and easy class of investments where you can copy to ease into the world of investing. In the coming days, I'll upload videos dissecting certain stocks that I believe has high potential with due regard to facts and data. On a side note, in Hong Kong, to invest independently, you must have 10,000 Hong Kong dollars to open a brokerage account by yourself. If not, you can just ask your parents or a close relative to help invest for you. On to the first way of investing with zero risk and high reward is simply to repay your overdraft credit card payments or high interest personal loans. However, if you don't owe any money, then you simply skip to part 2. The reason for repaying such loans is because these loans usually have an interest of at least 25% per year. Therefore, by repaying all your loans, you'll be guaranteeing 100% that you'll earn at least 25% of your money back. Hence, this should be the first thing you do with your money. The second way is through ETFs. ETFs, also known as an exchange traded fund, are essentially a huge basket full of securities, also known as stocks or other financial products. In terms of buying ETFs, it's actually relatively simple. The same as buying a stock. All you have to do is engage in a transaction with a brokerage or a bank. Now I will go on to the pros and cons of purchasing this financial product. The pro of an ETF is simply with limited funds, you can already diversify your funds. Now how this is achieved and why it is important, I'll be using an example in Hong Kong. This ETF is called the Tracker Fund of Hong Kong. This ETF essentially tracks the Hang Seng Index, which takes into account 50 different well-established firms in Hong Kong. This will lead to a lower risk compared to investing into a single company. This is because if even one stock drops, the other 49 different firms' stocks can fill that loss incurred by that one single firm. Whereas if you only buy into one firm, if it drops, you will simply have no other fallback. Therefore, ETFs such as the Tracker Fund of Hong Kong will smoothen out the fluctuations and risk of single company stocks. In terms of cons, these ETFs are usually slow with low returns. As such, usually you will hold these for the long term, as in the short term, you wouldn't really gain much. Overall, there's a multitude of ETFs to choose from, but that's just for the Hong Kong economy. However, if you want to invest into an index tracking China's economy, you can buy into iShares A50. On the other hand, you can buy into Vanguard S&P 500 for the top 500 companies of the US. Those ETFs are just to track the overall economy of that country. But if you're ready for a more risky and high growth ETF, I would recommend ARK's ETFs. ARK Invest has 4 actively managed ETFs that are focused on disruptive innovation. These are the 4 different ARK ETFs. The logic behind this is simple. ARK's funds have been specifically focused on companies that are pushing boundaries in their respective fields and have tons of optionality. Disruptive innovation is by definition hard to predict with accuracy. The market can struggle to estimate the total addressable market of new technology or for how long a company can sustain its growth and market share gains. Therefore, you can decide on whether to invest in these ETFs after considering your risk levels. Onto the third way of investing is to simply by subscribing and liking this video. Jokes aside, the third way to invest is through REITs. A REIT is a real estate investment trust, whereby the trust invests in shopping malls, office buildings, and hotels for rental income. According to the law, REITs must distribute 90% of their profits through dividends. By buying into a REIT, you're essentially one of the property owners and you will be receiving rent. In Hong Kong, there are quite a number of REITs you can choose from. These include Lynch REIT and Fortune REIT. In order to decide which REIT to invest into, you all can research into which properties the REIT owns and consider for yourselves. Lastly, the most obvious way to invest is through stocks and cryptocurrencies. Compared to all the other methods of investing, this is by far the most risky type of investing you can do as a new investor. As such, it is not suggested to throw all your money into the stock market, as in individual stocks, or into the crypto market. In order to safely invest into a stock, you must first do your own due diligence. This includes understanding the company's financial as well as their operations. Now, if you decide that the company has a good future and a good growth ahead of them, you can consider buying their stock. As for cryptocurrencies, as this product is still quite novel, unless you really want to, I would suggest you to stick to Bitcoin and Ethereum until you've fully understood how these currencies and blockchain work. Overall, this is the first episode of my personal finance videos. I did not dissect and evaluate individual stocks in this video, as this is made to be an intro to the world of investing. If you want comprehensive due diligence and research onto different stocks that may shoot to the moon, consider subscribing as I'll be uploading frequently. Thank you for watching, and that will be it for this video.